We're here with Tatiana for this week's Mortgage Minute. And what you got to say?
Well, I've got to ask, number one, what's going on this week with interest rates and the mortgage market? And then at the end, I want to reserve some time because I want to talk to Tatiana about buy downs.
Okay. Yeah. So what's going on with the interest rates this week?
Hi, guys. Well, first of all, thank you so much for inviting me to this Mortgage Minutes. I love it. So interest rates. They went up again. They continue increasing. And, the good question is, when we're going to finally get some relief from the sky-high mortgage rates?
Right.
Probably not until late next year. And, but we might start seeing some rates inch down in the coming weeks and months, depending on certain key economic indicators. For example, yesterday's ADP numbers showed 89,000 jobs created. It's significantly lower than 180,000 in August and 160,000 forecasted for September. So that is the sign of the economic slowdown. And when inflation comes down, the mortgage rates come down.
Okay.
So, the Fed has indicated that it is watching for sustained signs of slowing of inflation, and it's not going to lower the rates again anytime soon. So that's
not going to lower or raise. Either one. Are they just going to kind of hold steady for a while? Is that what they're thinking?
Yes, that's what they're thinking to do. That's what they're gonna do. And Fannie Mae and Mortgage Bankers Association predict that mortgage rates will fall next year, but they disagree about the fourth quarter of 2023, as some other companies predicting. So they think that rates are gonna start going down first and second quarter of 2024.
Okay, so the beginning of next year, then,
yeah, that's kind of what I've been hearing.
Okay.
Is kind of like beginning of 2024 to spring of 2024.
Mm-hmm.
The way they expect to take something down. Okay.
Okay, but then it still bears repeating, I think, every single time we talk, that it still doesn't make much sense for people who are ready to get into a new home now to wait when they can just refinance once those rates are lower, right?
Yeah,
because
yeah.
Everybody who's waiting, then they're going to flood the market, and we don't have the inventory for everyone to be shopping at once, because then the prices are going to go even higher than they are, right? So even if the rates are going to be going down, we still don't need to hold off, right?
Exactly. And, those are all predictions. And a lot of times all those, specialists, they prove to be wrong a lot of times. So we don't know how is it really going to go down, the rates, going to go down in beginning of next year or middle of next year. And just like you said, people wait, a lot of people are waiting. And, once rates go down, prices are going to go up.
Right.
More. There's going to be more competition. Yeah, rates will go down, but you're going to end up with the same monthly payment because price increased.
Right.
We actually did a case study where we looked at buying now with a higher interest rate versus waiting for a year for the interest rates to be lower and buying then, and how it actually cost in that one example of a $500,000 house. It actually cost in the case study like $35,000 extra to wait, even with the extra payments calculated in, even with the all of the factors calculated in with the higher interest rate versus the lower rate, because of that price escalation when the demand hits the market. Exactly. So, and if I can do it, I'll somehow link that to this video in some way, shape, or form.
Yeah, because I know you see that a lot, Tatiana. We've had that discussion about borrowers, and you've gone into the cost of waiting with them, and it oftentimes works out that way, where they're losing money by waiting.
Yep.
Exactly. And yeah, I saw your video. It's great, and I 100% agree with all the numbers and everything you say.
Okay, so I'll make sure link that. So what did the rates go to? Because last week they were at 7.31. What did they go to this
week? So they're about 7.5. That's with 1 point. Remember that it's always with 1 point. I see now 7.75 is 0 points.
Okay.
A lot of times, of course, it all depends on everybody's situation and credit score and how much they put down, what program they do. It. Government programs tends to be having lower interest rate than conventional. Right now, we're talking about, Fannie Freddie, that's conventional rate.
Yeah. Okay. All right.
Okay, so we've been talking the last several weeks about ways that people can kind of mitigate these higher interest rates, right? That we're all starting to get used to. We talked about discount points and we talked about ARMs last week. And this week, would you please go into buy downs with us? Okay.
Yeah, so the buy downs could be a really good temporary solution, right? For clients that maybe not want to buy now, but they're not too comfortable with monthly payments, and they're betting on refinancing later. Temporary buy down could be a good solution. Created little PowerPoint again, because I think visual is really good. Let me share my screen.
All right.
Let me figure out.
Oh, we have the lawn people here again. Just that they showed up right as we were launching.
Oh, really?
I said it's time to set up. That means they're going to be pulling up any minute.
Yep, and they did.
But we're not even going to pause, right?
No, we're not pausing. We're
that's okay, because I can't even hear them.
Okay.
Okay, so let's see. Can you see my screen? And it's empty right now, right?
Yes.
Okay, so temporary buy down. How does it work? So 2-1 buy down. 2-1 buy down is when the interest rate lower by 2% the first year, then it's lower by 1% next year, and then goes to initial interest rate. So I'll go into details in a second. So let's just look at this scenario. Purchase price is, let's say, $630,000, 20% down payment. So the loan amount is $504,000.
Okay.
And the interest rate is 7.5%. APR 7.677, because APR is always slightly higher than interest rate, because it factors in some of the closing costs.
Okay.
Yeah.
So the principal and interest payment, the very first year, the interest rate will be 2 points lower than 7.5% than the initial rate. So it will be 5.5%.
Okay.
And principal and interest payment in this scenario is $2,862.
Okay.
The second year, the interest rate is reduced by only 1%, so it's 6.5%, and the payment goes up to $3,186.
Okay.
And then years 3 to the remaining 30 years, unless we refinance, right? The rate is 7.5%. And principal and interest payment is $3,524.
Okay.
And it stays like that for the remainder of the life of the loan, right?
For the remainder, exactly.
Okay.
And so in this scenario, buyer savings over 2 years is $12,010.
Wow. Okay.
So in this type of buy down, actually it's being paid by the seller. It needs to be paid by the seller.
The seller
so
has to pay
seller to contribute.
Yeah.
And which you're gonna be the judges, right? As realtors, it's gonna be possible for every scenario, for every contract. Maybe not. Maybe we can look into different type of buy down. There's also 1-0 buy down. Is not paid. It doesn't have to be paid by the seller. It's paid by the lender actually. And the way that works, I didn't do scenario for that one, but it's pretty much, it's similar. So the rate is lowered by 1% the first year. So instead of 7.5%, it will be 6.5%. And then the second year, it would go up to the full 7.5%.
Okay, and that's paid by the lender?
I'm sorry. Yeah, that one is paid by the lender. Exactly.
Okay. So that's kind of something that's like a promotion that a lender might offer. Is that what I'm hearing? Okay.
Exactly.
Okay.
So this is just little disclaimer that I have to put in the video. Somebody wants to read, they can pause and read, but I'm gonna stop sharing.
All right, Kel, read it to them.
Yada 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 blah blah blah.
All right. Okay, so to summarize, and correct me on any of this if I'm wrong, because there probably will be items. So 3 strategies for mitigating the higher interest rates. A permanent strategy would be discount points, paying points down, and then you're buying a lower rate for the whole time. The next 2 strategies were temporary strategies. The first one being an ARM.
The adjustable rate mortgage.
Yep, and then we talked about those last week, and then this week are discount points.
Nope,
This week
buy
are
downs.
buy downs,
Mhm.
which has to be paid for by the seller. The ARMs have no extra cost related to them, and the buy downs have to be paid for either by the seller or the lender. Is that correct?
1 buy down is paid by the seller, 0 buy down is paid by the lender.
Okay, got it.
Okay.
Okay.
Now, so we can speak to, like you were saying, how likely is it that sellers in this market would be willing to pay for a buy down? Not often.
Yeah. Back when the interest rates first started going up and buyers started first pulling back, sellers got freaked out.
The ones
So a
that were
lot-
already on the market,
the ones that
really
were
had
already,
to sell.
yeah. So they started offering that, but we haven't seen sellers that were willing to do that. And since that first probably 2-month window. And then since then, I haven't seen anybody that's been willing to do that or seller concessions because
Yeah.
the market's still been so strong.
Theory on why they were willing to do that back then when the rates first started changing. Would you guys care to hear?
Of course.
Yes.
My theory is that that was at the peak of the market, right? When everybody was pricing their homes really, really, really high.
Mhm.
So they had a much higher cushion to allow them to put that extra money forward. Whereas now, even though our rates certainly aren't dropping, but they're not getting these crazy high prices that they were before. I think they're more reasonable
pattern,
about how
yeah.
they're pricing, so they don't have that extra cushion built in to be able to offer buy downs when they have plenty of buyers ready to buy it without,
That's
right?
the thing too, is that the demand, when the rates started going up, the demand kind of dropped off for a little bit. We actually dropped into a bit of a buyer's market for about 6 weeks. So
Yeah.
sellers had cushion and they had freak out because buyers were pulling back. Well, then since that 6-week window closed, it's been back into a seller's
Right.
market the whole time.
So what do you think right now with rates being that high, and mortgage applications actually went down last week?
Yeah.
But do you think that it could be a possibility of coming and asking for sellers concessions? I got a couple of contracts with sellers concessions.
You
Okay.
have been.
Okay. So
Yes,
it might
I
be,
just
yeah, it may be possible, but I'll tell you that what we've seen, you can take that off there. What we've seen in the like statistically, keeps popping up there. Statistically, the inventory has gone down disproportionately to the buyer demand. In fact, last week inventory dropped down again, and buyer demand actually went up, even though inventory has dropped the last 3 weeks in a row. Like the ratio of it, but buyer demand actually picked back up again last week. So on a week-to-week basis,
Yeah.
it looks like there's just too much demand for the supply, even with interest rates going up, mortgage applications dropping, the inventory is dropping more than those mortgage applications. So there's still more demand than supply.
more demand.
Yeah, that's what we're at least seeing right now. That could change next week. I mean, that this could
Right.
turn on a dime, but that's what we're seeing at this point. So yeah, and then we are seeing some properties that maybe have been priced a little higher that we're kind of stretching
Right.
it. They are sitting for a little while, so maybe those are the ones where they're willing to do a concession versus dropping their price. There might be some work in that area. All right.
But so on your end, Tatiana, the mortgages, they've gone, the applications have gone way down. Is that normal for this time of year though?
Well, actually for me, applications went up, but
Yeah.
the data that came out are saying like overall in general, applications went down.
Yes.
And that was nationwide.
Yeah, like nationwide.
Okay.
Okay. So our area, we could be a difference too.
That's it, exactly right. To your point is, these articles that we're reading is that the real estate market is slowing way down. And we're hearing it from people around here. We've been doing, thankfully, pretty decent the last several weeks.
Yeah.
So,
Yeah, the market, I think the volume has slowed down, like compared to last year. But so here's something interesting. I just did the report of September 2023 versus September 2022. And each time I do these monthly reports, the inventory and the transactions have been about half of what they were in 2022. but September versus this year versus September last year, it was about 10% less.
I noticed
So,
that. I
yeah.
noticed that.
Because last year it dropped drastically in
Because
September
of
and
the pandemic.
October.
Yeah,
That's when actually we were in summertime, it was still as high as, almost as high as 21, but
right.
then it's just like
Yeah,
crashed.
yeah. So the market has kind of stabilized a little bit with these interest rates.
Yeah.
So, and that's just the number of transactions and everything. So I think that we kind of came down and hit this bottom, and all of this is number of transactions, not
Yeah.
prices. Prices have continued to go up, but I think we kind of hit that bottom because we're at like 2008 levels of transactions. And then I think that from this point, we'll start kind of picking back up on
Right.
that, even if the interest rates stay where they are or go up a little bit, because
Mhm.
everybody's kind of adapting to it. All right, anything else? Any other points of wisdom for us?
I think that's it. You know, the points of wisdom is watch videos of Sean and Kelly because they're awesome. I
Thank
love it.
you.
Seriously, you know, it's true. They're really, really good. Thank you
We
guys
appreciate
for
that.
doing them.
And get in touch with Tatiana
Yes.
for all your mortgage loan questions
Yeah.
and to get that pre-approval. Guys, we cannot submit offers. No one's going to look at an offer without a pre-approval.
Yes.
Tatiana, will you tell everyone how to get in touch with you?
Give me a call, 571-245-3000.
Okay.
Thank you
Okay,
so much.
and I gotta say something
Oh,
real quick.
okay.
Okay, a PS. Do you know what a POFA is?
Pufa?
Have you had any clients call you and ask you for a POFA?
Pufa, I know Pufa.
Okay, so we did a video call and we call it a pre-offer full approval.
Right.
So that we can get that shortened, like we did with that client that was able to close in 10 days with you.
Yes,
like
yes.
cash,
Fully
where
approved.
they're fully approved and ready to go. So if anybody ever calls you and asks for a POFA, say Sean and Kelly sent us for a POFA, just that's what it is. Okay.
Okay.
It's a pre-offer
We made
full
it. I
approval.
don't mean people are listening.
Yes,
If they
high five.
Maybe you need to copyright it. I like that.
Yeah, we're gonna trademark that one. Home of the POFA.
Pufa.
need Mofa Pofa.
All right, anyway, have a great week. We'll see you next
You too.
week. And thank you for your time.
All right, thank you guys.
All right.
See you next week.
Bye.
Bye.